To the next video, guys. So I hope everything so far has been sinking in. If not, go back through the videos, read the book a few times, have a play on the charts. So gone through the trend line bounce, the confluence is looking for, how to actually draw the trend line on there, combine it with the moving averages, combine it with the key levels, and so on. So this video is going to be a rundown on the trend line break, the rules, and then the next video is going to be about counter trend lines. They kind of tie in hand, to be honest, but I just want to separate that. A few different concepts I want to talk about. So trendline break rules entry. So obviously we have the Aussie dollar, which we've already marked out, okay, on the daily time frame, right, which we've looked at on all videos now. If I can just remove this. Okay, so what we have is the daily trend line has been broken. Daily trend line has been broken. The things we're looking for. Right, so we have the MA cross. Now the MA crossover is going to come before a break, 2 same time as a break, or 3 a break, slightly after the break. Now this is in fact in the book in the moving average crossover section. Here we have it before the break, after these mini little dojis, this little consolidation range, accumulation range here. We've had the crossover to the downside. So before we've seen any of this price action, if you can imagine, none of this is there. So what we can actually see there is obviously we bounce off resistance. So I've already mentioned that what the market's going to do is going to create the higher highs, higher lows, or the lower lows, lower highs, hit one of our key levels, and then reverse. Upon reversing from one of our key levels, so we can draw trend lines because on various time frames. Okay, so as an example, the market has decline, found support, and eventually broke the trend line. It's retested it nearly, and then it's gone from bearish to bullish, back to bearish to bullish. Sometimes goes sideways in between that. So the moving average crossover with the trend line break is vital. The moving averages are still crossed over now, so this is telling us that there's going to be potentially more bearish momentum. I've already mentioned in prior videos, don't take the moving averages as pure gospel. It's not one of those things. It's just a guideline to assist us in our trading probabilities going forward. So this is my favorite. The favorite is before a break, gets us ready. Same time as a break, you may sometimes just have to move the candlestick out of the way by clicking line chart to see what's going on there. And then after, so if it happens afterwards, let's say we had a breakout of the trend line, which is, that's the breakout, but this is the official. Okay, we're fully out of that trend line now. What we want to then do is wait for the moving averages to cross over before going, short in any case. Now, on the weekly and daily, I've already mentioned, we want to use this as a guideline, so we don't always have to go, okay, here's a trade on the daily. I personally wouldn't, because I know this can often happen. I've already mentioned it can happen 75-80% of the time, breakout, retest, then a continuation. So what I like to do is I'll use this knowledge right here. I'll come down to smaller time frames and I'll trade in the direction of that trend. So going to the USD CAD at the moment, what can we see here? So drawing on trend lines, I know this is a significant low across there. You can draw another one across here as well. So what we've had is 0.1, 0.2, third bounce point there. Eventually it did go on and make new highs, but this whole range is a consolidation area, to be honest, on the USD CAD. It looks as if on this daily time frame now, let's look at the weekly first. Yeah, the weekly time frame, last week's close was a doji with a Maribozu, is that? Yeah, Maribozu, so no wick at the closing price. So we've retested the zones. I know across here we have resistance as well, 3200, 3100 to 3200. Moving averages across to the upside on this weekly. We ideally want the moving averages to cross back below. But just looking at the candlestick formation and what's happened on the weekly and the daily time frames there, as you can see, we had 2 days of consolidation, two dojis in a row, brilliant factor to determine a potential reversal. This could be a lower swing high from here, okay, and then here. So lower high, getting ready to make what, guys? A new lower low past this. That will be the last lower low, right? So remember the 75% chance now USD CAD will decline from 1.2981 to take out 1.2760. So that's 120 pips. If it does do that, what I'm focused on here is we are looking at a trendline break. Now this one was very messy, very messy, but this secondary one, this outer one here, this could be the deciding factor for this going a lot lower. And in the grand scheme of things, we're looking at the market taking out this level. Okay, taking out that level. Now in the book, there are a few examples of trendline breaks. So this is the Euro USD on the weekly. So we had 0.1, 0.2. So when the trendline breaks, generally speaking, the second point here is going to be the first target for the break. If we break below that, our first point is going to be the overall target. So trendline 0.2 equals target 1. Trendline 0.1 equals target 2. If we relate this to the USD CAD, so this is 0.1, this is 0.2. Obviously, using our logical brain, upon a break, we're not going to say, okay, that's the first target for USD CAD, even though it is in respect of the lower low structure that could potentially come through after this lower high here. Okay, we are going to be looking for 1.2470 to come through, if not break through and go even lower. Okay, so going back to the book, got these again, MA crossover before the break, which is the best signal, the warning signal just here. Shooting star reversal candlestick at the resistance. So again, even though this was very choppy price action, it hit its head on a barrier, came down, broke the trend line. It remained below the moving averages as well. Smashed straight through target 1. Came up to retest that here, 1, 2. Moving averages stayed crossed to the downside. And then I didn't expect this one in myself, but it actually broke straight through secondary target as well. Okay. So it's quite straightforward, to be honest, these rules with a trendline break. So where do we actually instigate the official break, and how can we say it's an official break now? This is one that I'm going to have to show you on. Let me just pull up a past example quickly. GBP USD would be good for it, 4 hour. Okay, so when a trend line is broken, the things we're looking for, the confluences, we don't necessarily need 5 as we did on a trend line bounce, but generally speaking, what we're going to see is, if I can just use my bubble tool for this, and this goes for counter trend lines as well, guys, as we'll get through that shortly. So I'm going to use the call out. So number 1 is the moving average crossover, and the official low, so 2, breakout candle close. So when that breakout candle closes, and obviously it can bounce its head off resistance. I'm sure you guys know now the importance of top-down analysis, looking at the bigger picture, then zooming down to get some structure in your trading and organization. And also obviously keeping an eye on where your targets are. So let's say, for instance, we have some daily support at 1.2900 or whatnot, and then we can weigh up the risk reward factors here as well. The stop loss is always going to go as the A tool. Above highs in this case, so once more you can measure, so 1.3371, we can go 1.3391 stop loss, and then we can obviously take it down to our key level of support, whether it be daily, weekly or monthly in this case. But number 1 is the moving average crossover. That trend line is supposed to be connected, and then same thing with all of these trend lines going forward. 0.1, 0.2, breakout candle close. So upon the breakout candle close, which is right here, okay, that is your entry. That is when you want to determine your sell position. Stops above the highs, and you want to ride the momentum down to the next key level. Obviously, putting into perspective any lower highs, lower lows on the bigger time frames, moving averages on the high time frames, watching out for news as well, remember. and just riding the overall trend. So these ones can come through in quite a rapid pace. The steeper the trend line as well, the more volatile the break's going to be, and the faster you'll see the volume come into the market. But yeah, if your risk reward doesn't make sense, because sometimes the breakout candle can be way too big, just leave the trade alone, I'm guessing. The next factor I want to take into consideration is the actual quality of the breakout candle. Remember the book, The Marubozu? The candlesticks with the smaller wick, the smallest wick on the candle at the closing price hold the most momentum and reliability. They're the ones that we really want to look for. If the wick is really, really spiky and all over the place, like something like this candle here breaking through, you know not to mess with that. You just want the clear, concise, consistent breakout. So even if you went a little bit deeper into this is a counter trend line move there, but the crossover and a little breakout here, nice stop tie above the last high or low in this formation. We'll get into that into the next video. But generally speaking, we're looking at stops 15 to 30 pips above the highs or lows. Looking out for the moving average crossover and then the breakout close as well. So there's two ways we can do this. We can use it as directional bias on the weeklies, dailies. Again, you can enter on the daily. Your stop is maybe relatively wide. So let's say, for instance, you entered upon the break of this here, full breakout. You could have gone in after the shooting star if you wanted to, but you can see that this is the clear break. So either way, if you enter at the end of this day or this day, your stop, regardless, would have to go where? You would have to look for the last swing high. So it would be the spike of the shooting star candle there, and you're looking at 15 to 30 pips above that. So 7,690, we're looking at about 7,710s. Okay, weigh up the risk reward, let the trade breathe, and so on. Depends on your trading style as well. You could maybe do some longer term trades. Now this would be a longer term trade, or you can again use this on the 4 hour. And you will get responsive trades like this on the daily as well, don't get me wrong, but it's not going to be as common as the 4 hour. If we're going into the 4 hour and 2 hour, we're kind of getting into the counter trend lines as well, which I'm going to cover in a moment in the next video. But just generally speaking, we can go through the charts, even at USD CAD on the 4 hour time frame. Let's have a look what else we can see over here. It's quite choppy, to be honest. Example such as significant lows. Now we have a few points here, so we can just maybe line it up. So yeah, point 1, we can take either that as point 2 or this as point 2. And what we've seen here is reversals around the daily highs, previous day's highs. Remember, that's what this channel is. We've got the crossover at the same time as the break there, as you can see. We've got the resistance in the way, but we can see the crossover and the breakthrough came through there. So your entry will be there at the end of this 4 hour candlestick. Your stop would have to go above here, and then you would have to weigh up the odds of the risk reward of it coming to, I don't know, again, maybe down to point 2 or all the way back down to point 1. It only reached point 2. So you'd have to weigh up the risk reward from potential target point 2 there. There's probably some support across here as well. I have removed some of my dailies, but I know there's a couple of dailies actually in the mid of this region, so there's probably some dailies across here. I'm going to have to go in and edit my USD CAD very, very soon. And also we have a potential of a trend line there. So again, I've gone from point 1 to point 2 just there. Crossovers already occurred on the daily, we just need a breakthrough. But again, if you're waiting for such setups as this and limiting yourself to just this strategy, you are going to miss quite a lot of pips, to be honest, especially in this counter trend line. Okay, counter trend market. Yeah, so this is a counter trend market. It's been sideways for quite some time. It's going to be very, very hard to use trend lines in a counter trend scenario. We more or less want to use this when the market's trending quite nicely, and then we can put the counter trend lines in there and just keep jumping onto the trend in the breakouts. So this scenario is better for trading reversals at key levels of support and resistance, not trend lines in themselves. So steeper the trend line, steeper the gradient of the trend line, the more volatile the break is going to be. So I just thought I would drop in some hints and tips there for you guys, and that's what more or less we're looking at there. So again, you can take a screenshot of that, but there's more information in the book as well. Thank you.